since our call in 2020 for the US debt market to upturn, late 2020, it was September, we have gone through Japanese markets, and told you that all these different tenors, the 30 years, the 20 years, the 10 years, even the 40 years, in a league being sub 1, 0.4, 0.5, etc. And they're going to somewhat up to being 3%, 4%, 5%, and we've even given you 6% as target. 6% as target on some of the lowest there. That's pretty big. Then we rolled into European companies, picked by YouTubes, that we've done with you, that have suggested that Europe, United Kingdom particularly, but also Germany, France. I give you this view, by the way. Have a good old look with me. Isn't it magnificent? Beautiful white sand. I want to make sure the mic's not getting knocked and brushed too much for the audio. Yeah, we did European, and then more recently we've emphasized Australian debt, which had a beautiful upside HVM setup. That we said this is going to accelerate immensely and reach the point where it is going to catch up with the Europeans, the Japanese, the Americans, and everybody else. Now, Australia, I want to mention, in terms of its property market, had a relative of the great financial crisis. It had a relatively easy fire of the great financial crisis. Relative. On account of China spend all that it needed to spend, people in the surf there, it's absolutely gorgeous. Shall we take it down the stairs? No. But let's show you the doggies having their walk. Some dudes going out for a surf there. Someone out there just going through duck diving under the wash. So the Australians, and there's many in Australia that think property is entirely immune now because they didn't great financial crisis. You know, Sydney is a beautiful city. It's especially insulated, you know. Other countries, other cities, Melbourne maybe. Now, I think some of that shine is already coming away on account of some forced sellers already being in the space. But I do want to say, they still think they're new. And as a financially engineered tool, property market, we are likely to find that everybody's going to find out that the raising matters, and the raising and the cost of that being matters, and how it will affect you. See if we can pull off here. How it will affect you in terms of affordability matters as well. Let's turn the engine off. It is an unbelievable
statement of fact that any asset that's financially engineered, has an interest rate and debt markets associated with it, is going to end up being in a situation where as the interest rates go up, the affordability goes down. And the other aspects and accelerants, these are not stable markets, these are polarizing markets. So in the bull markets, they self-feed. So let's just cover what I mean by that. You see those birds on the rock there, you might spot them. Let me move, the screen might be a little bit playing blocker here. Kind of dark on that rock. They've got a dark backdrop, you might not spot them. They look like birds of prey. So what I'm saying is, in the bull markets, because prices go up, more people want to buy. Because prices go up, the property is better collateral. More lenders want to lend. The more lenders lend, the more people who can buy. And the more people who buy, the more the price goes up. The more the price goes up, the more the new lenders want to get involved and lend and make margin and do usury extraction. So it's a self-fulfilling, it creates melt-ups, and when you unwind it, it creates capitulation. These aren't revert to mean markets that are naturally self-regulating. They are polarizing markets. That once you start a doom loop, you get all of the following happen. Rates go up, no one wants to buy bond as debt, they are devaluing too much, not paying a sufficient yield. Lenders withdraw from the market, less credit available, more expensive credit, larger deposits, much more fixed costs, admin fee, assessor's fee, this fee, that fee. They're all like tax extractors, these banks. They all know the game. More fixed fees, more penalty clauses, more general insurance that they get some profit, more concern, more strictness on underwriting. So what happens is everybody that thinks is prime is no longer really that prime. Only people asking for 50% or less come across as being creditworthy. The costs go up and all of this. So the ability to pay goes significantly down. And associated with the property collapses that come, and this isn't just about Australia I'm talking about, this is globally synchronized. European debt up, Norway's debt up. I mean, just to throw it up, it's not in the EU, it's part of Europe though. It's spiking quite a lot. I shared it on my X stream along with the UK. And what that means is you're globally going to have, for the first time ever, because China was not synchronized in the subprime, they did a property boom afterwards. They went building mad when the West was crashing. And that's why China was all the talk in 2009, 10, 11, 12, until they went bust on their own property boom. They did a quick one. That was 2016, and that's when gold bottomed after its $1,927 high. That's when it bottomed in 16, the Shanghai Accord, and then hasn't looked back. And that was at about $1,046, $1,050 odd dollars. And ran up to 2000, then had its 2.5-year continuation pattern, and then ran up post-COVID again, which we covered with you in many trades. So you're going to have the first globally synchronized on account of demand destruction. Certainly Western world, all Western world. Now it's quite weird to say Western world because they're not all in the West. South Korea and Japan are included in that, and they're clearly in the Far East. But I'm talking about Western aligned and broader European nations. I've just mentioned Norway, they're going to have a property collapse. Everyone's going to have a property collapse. And what's going to happen is you're going to see how interrelated the banks are. That will have exposure in multiple property markets, including not their own domestic property market, via instruments that they've bought, debt instruments, securitization, all the other mischief. You add private credit, where they've done essentially another version of subprime, where the banks control the market, the liquidity in the market, the bid and ask spread, and how much you can sell when everyone's doing a runner at the same time. So, you're sitting now with quite an unbelievable concoction of globalized and certainly westernized big issues that are all coming down. So property as an investment is going to have nominal value corrections as well as in gold ounce corrections. And they could be sustained, and I don't think they recover for a long time. And I think the multinationals of the Sabatier and Francus variety will be buying. Cheap, cheap, cheap. But they're going to let you suffer first and turn you into tenants in their own home. And they're probably going to launch a tokenization game when most people have been thrown out of their property and don't care, so that they can get the NFTs, the tokens for physical assets and who owns what, so that they can see how much you own. And tokenization is the digital clipboard for checking how rich you are on a new world order transnational basis. There have been many other property initiatives. I've got friends in Mauritius that were sending me links showing how property, who owns what property is going to be shared transnationally. This privacy in property is going to disappear. Governments are going to be asking and sharing information transnationally with other governments so that they get to see what you own and how much of it there is. So you need to think about property as an asset class. You need to live somewhere, and as someone who lives in multiple regions of the world, I don't like renting. You've got to own a home in each place. Many of you might be tenants, for example. And I would say to you, don't buy unless you've got the whole job lot, because the credit's going to be less. You want to be debt-free, and the interest rates will continue to go higher, and getting fixed deals is going to be harder and harder now. Everything we have warned since 2020 and 2021, so 2020 on the US credits, late 2020, 2021, multiple videos on the Japanese credit, 2022, 3 and 4 on Europe, UK individually, posting on Australia through X. I haven't done individual videos for Australians on it, but I've been talking about it consistently in the community, on other social medias. It's all happening. It's all happening. That's not a braggart thing to get I told you so plaudits. There are other people that have probably positioned in this. I would like to say that I don't know anybody who called. Everyone was still in the NERP, the ZERP category in 2020, and we are going rates up. It was an outlier position, late 2020. It's no longer an outlier position. Many people have come to us, come to our position. We continually take fringe positions that keep getting mainstreamed. It's frustrating, because then everyone's talking about it and everyone forgets how early you're in it. So we don't look for credit anymore. That's not important. It's how you trade it. It's how you position. It's not, I told you so. There's no value in that. There's no money in that. I will say we were early beyond many people, but that doesn't matter. That's a personal discussion. I don't care so much at all about that. It's happening now. It's actually happening. It can't be argued anymore. And you know how they're going to drive inflation with this engineered event. You know how it's coming. You know how they're going to do it. They're going to throttle the supply chain. That's what they do. So now it's like, okay. That thing Francis said was going to happen, and we've continued to say, long before people accepted it was a recession, we said a recession. Then when everybody started talking about the recession, we started saying the next thing is the inflation. And everyone was, no, you can't have inflation, we're in a recession. No, you can't have inflation, you're in a recession. We say, not only is the current CPI a lie, it's going to get much worse. What's happened? Powell keeps defining stagflation in all his statements. Well, I need lower rates for the economy and the labor markets, but I need higher rates for the inflationary outlook. Defined. The definition of stagflation. Low growth, flat growth, and even negative growth in an environment where the risks on inflation is up. Higher inflation. Stagnation economically, that's employment, business growth, yet excessive increase in prices. And the only way you get those circumstances, because normally when you have a recession, inflation goes down. That's what all these guys, Zeeberg and everybody else, get wrong, is that you're stagnating you are adjusting down, and it's fiat and debt that's going down. That's why you're getting the inflation. But you're getting that in conjunction with demand destroyed. And in fact, we've crowded out the economy to the point where everything was about AI. 7 stocks got all the money. They are convinced of the future government contracts. They can build without any concern the surveillance grid and data centers, because government will be hiring and paying them massive amounts of money. And they can, they can spread out their energy costs for running these things on everybody else. Yet they keep investing without any sign of return. It's the exact same as Bezos kept investing in AWS before anybody even knew what AWS stood for. He was a bookstore to start off. Then he was an everything store, Rockefeller, One World, buy anything. And then he was just super website, best checkout, all your data, memorize. And then it's like servers, AWS, all of this. He never made any profits. He had a bottomless overdraft to keep spending and developing businesses. Until he had such giant scale, there can be no competition with him. And then he gets all the US state business. And he's a juggernaut. Wouldn't you love a business where you could keep opening coffee stores even before you started selling any coffee, and then you could suddenly start selling coffee and no one else is allowed to sell. They can only buy from you. Or you have 90% of the market because you got something that nobody else has. Massive scale. You can do it at a lower cost. No one else can afford to compete with you. It's kind of like that. Anyway, speaking of coffee, schmuckbucks absolutely poison you. Some people pointing out that there's like paint stripper in the coffee. We've always warned you. They don't give a flying hell. Their goal is to poison you. They originate from the original well poisoners, and they have no concern or interest. They just want you to come back and keep feeding them money, and they want to do you no good. Let's ride a little bit more and show you some more beautiful views whilst we talk about this debt market contagion. There's a doggy. There's a doggy in the back. He's a good boy. He's a good boy. The lady's looking at me like I'm an absolute screwball. I'm not entirely sure she's wrong. So this is Misty Cliffs. And it's called Misty Cliffs because the ocean spray smashes on these rocks, and there's always a lot of it, and you might see the haze. And there's always ocean spray here, and it's always cooler by about 3 to 5 degrees because of that. And there's no building. It's got a very fixed build line. There's no more plots. Forget it. And the same applies for Scarborough, which is the next town, which is a bit bigger. So for those of you wondering where I am, this is the Atlantic. But it's the Atlantic that comes up from the Antarctic, so it is a cold Atlantic. And we're on the peninsula in southern Africa, called the Deep South. And again, we race here. There's height surfing, and a lot of other things. So this debt market contagion is the beginning of reset. Reset is debt market. You know, I always start saying it's the debt market. It's the fear and debt excess proliferation. And what's happened, this is a key point that I need to tell you that I haven't mentioned yet, and it's very important, is the debt contagion has moved from higher interest rates on the 10-year, the 20-year, the 30-year, the 40-year. That's already baked in. It wasn't in 2020 when we were calling it. It wasn't in the Japanese market in 21 when we were calling it. It was still below 1%. 0.3, 0.5, whatever. That's all baked in. The long term and the long end, all baked in with higher rates. What's changed recently is that you now have debt contagion coming down the duration curve. Coming down the duration curve. So what that means is the UK 3-year is one of the highest and fastest moving up. The UK 2-year, the 1-year is spiking. And that's not UK, that's everyone. European nations on the shorter end. So what does that mean? Let me turn that into simple market-based indication. What does that mean? When the COVID proliferation events occurred in 2020, and the rate started going up on the long end, which has got a lot of debt on it. It's a heavy debt market, lots of issuance on the long end. The Fed almost let it go and let it climb because they have to keep issuing new debt, and they started shortening the duration. Many of you won't remember, but actually Yellen started shortening the issuance of the debts that she was issuing. What does that mean? Instead of issuing 10-year debt, she started issuing on the 5, 3, 2, and 1. Into notes. They bought notes, the shorter duration. Even you can go below a year. So what that did is it moved debt that was being issued on the long end further down the duration curve because there was too much issued on the long end. The interest rates were too high. It would cause a crisis. So the interest rates are lower on the short ends. Typically yield curves go up like that. The further out, the more compounding of inflation, the greater yield is needed. You need a greater yield if you want to borrow long. Because they'd stuffed the long end so much and the yields had gone up so much, it was getting too expensive to borrow long. So they started borrowing shorter. And Yellen was big in repositioning on that. And they came down the duration. Shorter. Because it was cheaper. Not for any other reason. So we're done stuffing debt into this cupboard. It's stuff. The cupboard is stuffed. And it's getting expensive to hire it as storage. There's too much of it. Okay, let's find, instead of a cupboard, a place where it can be stored for a while, but then gets thrown out much quicker. You have to restore it. And that was the short end. What's happening now is the short end is going up. And when you're talking about the long end, when the long end goes up, people are saying, hey, at some point in the distant future, we're going to have some issues here. But for now, we're okay. Then later, when the short end start going up, they're saying, man, this problem is getting bigger. It's not going away. And actually, I think in 3 years, or in less than 3 years, we're going to have a problem. And the rates are going up. In 3 years' time, we're going to have a problem with this. And the rates on the 3 years start going. So what they mean, when the rates on the 3 years start going higher, people are expecting a problem within that time frame. And they're demanding a significantly higher premium because they're expecting the value of the bond to go down. And they would rather more of it got baked in now, and they get a better yield. So the less you pay, the better the yield for the bond. Because what people need to realize is bonds are issued new. Here's a Bobby John.
Hey, Bobby John. Jay Woodblock. Jay. Funny brother. Okay. Excuse me for my little outburst of something hot. Cape Colored style. So, when you issue debt, you issue it with a certain return. So say I borrow 100,000, I'll say I'll pay you 1,000 a year. That's what you said. And you get a contract. And every year I pay you 1,000, and then at the end of 10 years I give you 100 grand back. The problem comes when you want to resell it, and now everybody's paying 5%. If I want to borrow 100 grand, I now need to pay 5,000 a year. Your contract is worth 1/5. So this new issuance for 100 grand, people are giving me 100 grand, and now I'm paying them 5 grand, not 1. When you try to sell yours, most you can get for it is 20 grand, because markets are efficient. You've lost 80 grand, because 1 grand on 20 grand is 5%. Otherwise, the people go buy new from the government at 5%. So this is the fascinating conundrum. Debt and fiat is evaluated. That means currency odds. That's why you can have gold and silver go down. So I get a few people on X mainly, and the odd guy posting on the YouTube comments. I look at all the comments, I read all the comments, including the stupid ones, which is not that many, but there's a accumulation. The critical ones tell you where the people are and their level of understanding. They've said, this guy's been pushing gold and silver, and look how much gold and silver is now. He's a clown. And we're 100% pushing gold and silver. And we'll come back to doing it. In fact, I'm going to mention it again. Here's what's happening in the silver market. When it traded in the 60s, just recently 65, it's back at the 70s. You paid $80. The premium was $20. And they've got limited supply for you. They almost don't want to sell it to you. $20 premium. The price, the casino price of Colex is not the silver price. The silver price is the cost to get it delivered to you at your house. That's the price of silver. Because it's ownership. I'm not interested in what the futures and the CFDs and the derivative currencies will gamble on. That's not a delivery price. China is where you get delivery pricing, and with the premiums is where you get thin volume delivery pricing. So when the Arab Gulf states are squeezed, and don't forget these Gulf states fall under peg to the dollar. The Riyadh is pegged to the dollar. Now their whole country's shut down, everyone's missing off, everybody wants to sell their property. Hence why we warned, don't do Dubai. How many times have we said it? Leave your country, but don't do Dubai. All the British millionaires going to Dubai. Well, that's what you got. A 92% immigrant population and an 8% domestic, which is made up of a ruling class and then very well subsidized peasants that are on a social welfare program that is sponsored by the immigrants. And you've got massive parcels in the desert reliant on water, power, food all being flown in, energy all being flown in. Well, the energy is local. I shouldn't say that. The food and water all flown in by sea and air. The only thing they have is energy. Boy, do they need a lot of it for aircons and everything else. So then possibly some people have been speculating, and I can't confirm if that has been selling their gold. In fact, the Saudis are the simps in this whole situation. UAE, because they let America use them and abuse them in Israel. They are cousins of Israel, by the way, so we're always going to go along with Israel. But their economy is getting damaged. Their gas facilities are getting bombed. Who's going to get the contracts to rebuild? Halliburton, never fear. Halliburton is here. BlackRock is here. They're going to pay to get their country rebuilt after it's been bombed, damaged, spoiled, for being an aircraft carrier for America and Israel. And Halliburton is going to get paid for doing it. And they're going to end up being debted. They're going to push your debt. So I mean, that isn't a good deal. It's a pretty poor deal as far as I'm concerned. So they've made a big mistake. But that was their allegiance. They're a slave nation. They're a slave nation to the cartel, and they'll pay the consequence. And that's the same for Korea and Japan in the West. And Europe, who's a second tier NATO member, because they don't fund anything. They don't pay. Some hostages there, by the way. I don't know if you got the saw. So good. Some ostrich farms. They love a bit of sea air and mountains. It's great territory. Cape Point. So Cape Point is the tip of the peninsula. I'm not going to take you right into the points. It's a reserve. I'm going to turn around soon. But it's got a very unique fauna and flora, this. And many plants you only get on Table Mountain. And this is the tail of Table Mountain, coming down to the point. I'm going to take you back and we'll go have a look at Scarborough. So this is reset. That's what we're telling you. But it's a slow burn reset. It's like an anesthetic. They're killing you. But they tell you sweet words and they slowly say, we just want you to feel a little bit better. And they numb you a little bit. And eventually, because they're boiling a frog slowly, you realize you're getting number, less consciousness to the real world, going into a dreamscape, and you're about to be surrendered, terminated, completed, finished off. I was curious if there was any little paths I could go. I was keen to go a bit off-road, even just for a little bit. So I'll keep an eye out and we'll carry on a bit more in this direction. So you are in reset. Reset is not one event. Subprime was not demons. You know? It was everything leading up to that. Is that somebody's house? So this now, allegedly, to a degree, is the Indian Ocean. I've shown you two oceans today. And this is False Bay. It's the other side. It's beautiful. Now, none of this is inhabited. It's all part of the reserve. You might see some of the coastline here. It's all part of the reserve. It's got rocky beaches. No one swimming. Oh, there's a lovers couple there. Let's go and invade their moment a little bit and have a peek. Whoop. It's just about to turn off and in he came.
So these houses down here are generally staff and support for the reserve. Let's go climb off a little bit, keep myself in shot as best I can. In fact, let's get a little push closer. I don't know if that view's working well because of the screen. It'll be unpopular if I go and invade people's space, but I'm tempted to go a little bit like that. So what's actually happening is you're in reset. Here you are. If you want to know when you're in reset, it reminds me of that sign. If you're waiting for a sign to have a drink, this is it. And there's the sign, have a drink. You know, it's kind of, people are looking for something and they wonder when it's happening, and they're in the middle of it. And the sign is, have a drink. And if you're waiting for reset, allow me to hold up the sign. Here it is. This is reset. Okay, it's not a specific moment, it's a process. It's a process that we told you had to happen. Excess fiat and excess debt, excess supply of something means drop in value. What are we talking about? We're talking about money, fiat, and debt. That means bond markets are short. And we've continued to say TLT, short TLT. We even had Mark Farber on, and he said, oh, I'm tempted to buy some bonds here and maybe on the short end. We've just gone, no, since 2020, you only sell the debt market. Since 2020, the goal has been sell only. There are times where it's been good, and then there's been times where it's done nothing. But when it went sideways, the TLT has gone sideways for a while. And the key question on why, I'll help you off for a bit and talk to you, is that the dollar was being debased. The dollar was being debased during this period last year. So the dollar was the weak link. That's how you debase. You essentially have the money in both its forms, as a debt instrument and as a fiat. That's what's happening, guys. So debt go down, that was the TLT 2020, right through 22, 23, right into the lows, 24. Then the debt hung, everybody was getting short, 24, at the end of 24, Druckenmiller, everyone talking about it, now it's mainstream, hey, let's short the debt markets, hey. So what happens? Debt stops going down, it churns, is a bad trade now, not because it's going up, but it's just churning. And what is going on? What is going on? The fiat devalued. Okay, so now the fiat devalued, you had a dollar losing so much value against all the others. It's fun seeing there's some boats over there, you see coming around the corner. Someone over there, I'm sure you'll see it. And there's a rock out there, it's a beautiful view. And that's the other side of the bay. This is a very big bay. And those of you that saw the classic video of the shark breaching with a seal, miles into the sky, it was right here. We're very shark aware here. There's shark spotters, but we're also preservational with sharks to a great degree. And I saw YouTube with a guy who interviewed who actually got that footage, and he got it, and it was used in BBC, the wildlife, or you know, the whole shooting match. Anyway, so you're in reset, and the debt markets are going up, and the disease is creeping. The disease is creeping down the curve. The cancer is there, the bad conduct, the heavy living, the whiskeys every night, you know, the cocaine parties, the odd heroin shooting up. It's all coming home to roost. Yeah, it's all coming home to roost. And your life is getting, everything's so hard, everything is so sore, etc., etc., etc. So you're sitting in this situation and you're in debasement. That is where you are. You're in debasement. And the disease is coming down the duration curve. It's coming from the 40s, the 30s, the 20s, and the 10s, the long terms. And now your 3-year, your 2-year, and your 1-year are all getting debased. And what does that mean for you? Well, it means that asset class is going down. It means your government is bankrupt because it can't raise the money anymore that it needs to run the country. It's chronically been overspending. It's really fun watching the progress of this quite small fisher boat coming into the harbor. I don't know if there's a jetty. I'm going to go have a look. So there's someone who's put a bit of a foofy slide here, which we used to call. So that's a rip line, a jet line. So there's some sort of entertainment that goes on here. I don't know if I dare pop on down and grab a little bit of a ride, but I could. And then let's look down at these houses. I've never seen how many there are. It's a reasonable little district. I don't know what they do when they want a liter of milk. And I don't know how do they get to their cars? Because I ain't seeing any driveways. It must be round the side down there. You've got a little bit of a beach. It's fascinating. Because these aren't official beaches. As a member of public, generally you don't go there. These people, it's quite hippie huts there. They look a little bit almost redneck. You almost want that dun 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 dun, you know, the Burt Reynolds Deliverance tune on that one house that looks properly rickety. Ironically, with some solar panels on it. You guys on the camera are wondering, what's he talking about? Because I didn't show you. I'll show you the rickety Deliverance house when I turn the bike around. Camera stays on the bike, so you just get the walkabout audio. I'll show it to you when I turn around. Anyway, so here's where we are. It's coming, the disease, the cancer, is coming down the duration curve. Soon, you won't even be able to borrow on a year or 2 year. The percent will be ridiculous. Why? Because nobody trusts you, nobody trusts the money, and nobody trusts the debt as holding value. And that's when you get contagion. Now, this is getting much closer than people realize to big events. The big tour bus coming down here. I'd hate to see him lose his brakes. That would be the end of my bike. So, with that all said and done, what do? Well, the one thing that people aren't talking about enough, that they spoke a lot about, and I think this is mainstream media suppressing this, is banks. Banks hold treasuries. They're devaluing. Banks issue debt. They issue bonds. Banks have clients that are going to be sitting on negative equity in property. Banks have just about everything that I've mentioned that's turning bad. They are the intermediaries. They are the drug sellers, you know. They are the heroin dealers. They are the cocaine dealers. They've been selling you the alcohol, and they've been drinking and partying along with you to an even bigger degree. And they've always been bailed out by the Fed. They've always been bailed. After every party, they get a new kidneys and liver, courtesy of the Federal Reserve. Only the Federal Reserve is now running out of the ability to deliver clean new body parts for the bankers to mess up. And isn't it so typical of the every single time crew that once again they've created excess leverage with shitty quality credit? And they can change the name. Now you've got private credit. Okay, we now know what private credit is. Private just means you don't get to see what we're doing, and you don't get to see the price, and we control the liquidity and the bid and our spread on it. I'll go a little bit further and turn around somewhere. And because of that, you've got a subprime by a different name. It's actually worse than subprime, because it's worse than high yield. It's worse than junk bonds, because at least there was a bond market for those things. You could sell them. I think I'm going to turn around. This is a beautiful ride, and I'll do more of it on another time. But I'm conscious of I don't want the video to be too long, and we still got to go back. So every single time the banking cartel runs a pump and dump scheme, which socializes their greed and selfishness on you in fiat debasement and actually builds wealth for them. That's their game. During the pump phase, they get the wealth. During the dump phase, you carry the can. That's their game, every single time. And it doesn't matter if it's the savings and loans crisis, the long-term capital crisis, hedge funds, excess leverage, the subprime crisis, even the excess liquidity of the dot-com, which was all on making too much capital available. The washout does damage to you, whether you participated in it at all or not, and got the upside. So what I'm saying, that is very important, is you need to get money out of your base. And the question then becomes, what do you do with that money? Now, assuming you have a reasonable amount of it, you need to buy bullion. And what about spending? You say, what about your daily needs? This is a good time to have a lot of cash, notes, and stock. And it's a good time to have stable. Let's go down that road. Let's just go down that road. It looks such a nice road. It is getting a bit late in the day, but I want to do something that's off the tarmac. I hate taking an enduro off-road bike only on tarmac. It feels like a sin. It's probably somebody's garage driveway, but let's at least see a little bit of dirt. There's some sort of animal up front. What are you? Oh my god, it's a little pig. Hello. Hello, piggy. I think we're definitely on someone's farm. I'm always curious by these little quiet hamlets. Klein waterval. Klein waterval. Oh, that's Bobby John. Let's go for a little off-roading. That's the Bobby John. I hope we're not on private property and someone comes out with a shotgun. No idea where I'm going or where it ends up, but let's have a look anyway. We should end up back on the road soon enough. Just more interesting little two-tracker. Ah, we found our way to somebody else's house or a bit of farmland. That's Bobby John! See? Got a lot of them around here. I don't want to end up in a brawl with a troop of Bobby John. Just now one of them mugs me from above and jumped down. Bobby John is actually a popular Cape-coloured phrase in Afrikaans. It's Afrikaans for baboon, as you probably worked out. You should say Jan or Bian in Afrikaans, but can't see too much. Let's go find a path somewhere else. Anyway, So here's another snippet of potential counsel I will give you. And I think I'm feeling strongly. They want to nudge you into CBDCs. They want to nudge you into CBDCs. So I think what's going on in the Straits of Hormuz, which is a throttling of supply chain, so that they can create inflation. What's happening in private credit, which is you can only get access to some of your money in redemptions, is what's probably coming to Vance. You're going to sit with a certain amount of money, we say, your money's still here, but you can't withdraw more than X, or you can't spend more than half. Yeah, my face is doing it. And how do you flip that? Let's say I'm right, which you don't know. I'm speculating. In other words, they show you the way where they're taking it. Private credit and a Strait of Hormuz are microcosm restrictions of where they're taking it. And where is that? Prices higher, inflation, restricted supply. That's the Hormuz theory. And what about the story with private credit? The story with private credit is restricted access. What's the common theme between private credit, Straits of Hormuz? Throttling of supply, slowly choking, anaconda style. If you're talking as an African, I will say python style, of your ability to access what is yours. Not cutting it off entirely yet. The Strait of Hormuz is not shut 100%. Certain things are allowed to go, certain alliances are allowed to remove, and certain others have to wait, might get later, or might not be allowed for an extended period, which no one knows when. That's where we are. And that's going to come down to your banking system. Certain blocks of banks in the Eurozone will have harsher restrictions than banks that are in Georgia, Southern Africa, Latin America. Only so much of your money can be accessed. Pause. You know, Iran and the nuclear, which is the smokescreen. The real reason is because everything is failing. The debt is failing, the fiat is failing, there's over-proliferation, and they're bankrupt, and they need to steal from you. And the way they steal from you is they slowly wall you. They keep free the poison. Remember, they don't just jump up and start firing. It comes slow. We have to do this. Then you get an escalation. Then you get normalization. Then you get an escalation. Then you get normalization. Then you get another escalation. It's the staircase to totalitarianism and Bolshevik communism. So, what do you end up having? Is you getting slowly squeezed out of things you can access. And the amounts come down. And for those of you that say that won't happen, let me tell you, it's already been happening.
Ask yourself how much cash you can withdraw from your bank. It used to be unlimited. In the old days, if you had 100 grand in your bank, you could make a call and say, listen, I'm doing a big withdrawal. You could go there and withdraw 100 grand and receive 100 grand in cash. Then you could go make it in another account, or you could bank half of it in another account, half of it in your safe, under your bed, whatever the hell you wanted. Then it became, oh, you know, you only withdraw this amount, that amount. We need to check it's you. So what's the big theme that's come up with banking? The big theme that's come up with banking is, first of all, scams. They've supported scams. They've allowed scams to exist. There's very little policing for shutting down scams. What's the gift that scams give banks? We need to check it's you. For your safety, you can't move your money. We're making sure this is you. It's a safety thing. It's a safety mechanism. Can you confirm you just made this transaction? Well, I did the light check. Let's get this lights up. So what you've been having from the banking cartel, is less easy access to your money, reduced amounts of cash that you can withdraw, much more confirmation required for your safety. Plus, they've been telling tellers you must ask the people what they want to do with the money. If you're taking money, hey, is this you? What are you going to do with your money? If you're doing a transfer of money online, are you sure you're not being scammed? That's the banks. They're saying to you, did someone phone you up and sell you something on the phone? Are you aware that many scammers operate? So in the name of protection and your safety, they've already been throttling you. In the name of protection and safety, they've been throttling you a ton. So all I'm saying is, and we are continuation traders, I should mention this, and it works exceedingly well for us, by the way, is keep on expecting it to keep on. The point is, it keeps squeezing harder and harder, though. On a braver day, I might have taken that path, but this late in the day, not having done it before, I won't. So, they want to nudge you towards CBDCs, which is as close as, damn it, to stable points. And the exchanges are now fully KYC compliant. All that freedom malarkey, privacy malarkey that went with crypto, as you've now realized, or should have realized, is all bullshit. It was an on-ramp for a greater control over you, not a liberty control. They always tell the exact opposite lie. Bitcoin for libertarians and safety from the government, you know, to secure you away from bad actors like the warmongers and your government. Now, as you know, it's, hey, BlackRock pumped my ETF bags. BlackRock CEO, stroke chairman,
the guy is essentially the World Economic Forum leader. He's a good boy. He's a good boy. Now he has to sit. He's in trouble. Go white lab. White labs matter. So the plan was I was going to put this camera on a selfie stick and walk you onto the beach so that you could get a little bit of walk and talk. But I've got folks waiting. Let's go here. We can always try to turn around. It'll be a bit of a mission. But this is a popular beach called Scarborough Beach after the town. It's actually Camel Rock, I should say. It's Camel Rock, and I love a swim here because you always get waves, and I love catching waves and going out a bit. It's also cold, so the temperature is between 9 and 15 degrees, 9 to 14 mostly. Occasionally you might get a 15er, most of the time 12 to 13 degrees. So it's crisp. It's a cold plunge with seawater and real waves. So it's less protected. This whole strip is less protected. But I am also running late for my steak, which I promised because we went for a longer ride. So I'm going to head on back and get in trouble with all the people that expect me to be on time, for which I never am. So we can do a lengthy turnaround here. So for those of you wondering what bike it is, it's a Husqvarna 501, which is probably their most powerful or good single pot bike. It's about 64 horsepower for the men that want to know what's the power, but it's super light. It's still an enduro. And that makes it great fun. You see all the doggies come for their walk, and some of them swim. I really miss getting a bit of dirt in here. Let's just see what this road looks like when you go down it. Do we get any dirt at some point? So yeah, the 501, very good for low grunt and torque. We hit the reserve. This is what I expected. Everything around here ends up on the reserve, that is the peninsula at the end. Some nice walks. I could possibly ride along the fence along there, but given time, left it a bit late today. It's a Friday when I'm recording this, by the way. And the bond markets are slipping and the yields are rising. That's the big news. But reset is here, and we're talking about banks. It's all going to become a bank problem soon. But they're intentionally not talking about banks much. Remember when they had those banks that went bust in 2022, the ones that's at hand? Why are they not talking about banks now? Because credit and debt is crashing. Bankruptcy is at all-time high. Unemployment is coming in. Delinquencies on car loans, housing loans. The prime market is starting to show signs of real decay on the credit side. And I mean, you know, it's usually the dodgy, underwritten, dodgy guys that are always the problem, you know, with subprime and all of that. You're starting to realize that prime is subprime because the assets are overextended and the job market's turned back. Don't forget the most ridiculous measure, which is the non-farm payrolls, which always gets restated. Next time we do a ride, I'll take you up into Scarborough so that you can see the views of this beautiful beach that's here, Camel Rock Beach. I'll drive you up and down by those houses. See them still bathed in sunlight up top there. But we need to get back. So how do you prepare? What's the takeouts? Just giving me your time. And time is valuable. What's the executive summary of this video? So the presentation of facts is universally bond rates are going up, but particularly on Western nations. More so. Australia, Europe. That's number one. Point number two, executive summary, bullet points. The sickness regarding the devaluation of debt is coming down the curve. It's no longer, hey, one day in 30 years, 20 years, 10 years, some shit will have gone down. It's like, hey, sometime during this 3-year duration, 2-year duration, 1-year duration, some shit's going to go down. I'm not even sure I want this 1 year. Pay me more money, sell it to me for less. So the disease is coming all the way down the curve. And why? Because they started issuing. I love this rock face up here. I don't have 360. We're on an Insta 360. This rock face is absolutely beautiful. There's no one behind me, so I can drive like a polluter. But you just see it. The dark brown, the fake white, the birds of prey that live there. The mist off the ocean is so good to breathe. I've actually been very restrained on speed because I'm very conscious of the audio. I can't help it normally wanting to give my bike a bit of gas, but I've been pootling today. So the exact summary, point number one, debt markets are collapsing everywhere, particularly the West. Point number two, the duration is coming down where debt markets are collapsing. The disease is coming upstream to source. Short duration is going up now faster than long duration because it's lagged. The issuance has been more on the short end now because they can't afford the long end. They have to pay too much. What's happening? Now you can't even, you'll soon not be able to afford the short end. What does that mean? Government won't be able to afford the promises they've made you. So what are the takeouts if that's the exact summary? We also spoke about Saudi Arabia, collapse of Dubai. What have they done with their money? They feel cheated. America is not looking after them. Yada yada, fish base. Quite a few aspects, which has maybe led to a little bit of gold being sold off for liquidity. They have pegs, which I expect to have fall if the dollar starts getting strong, because they no longer have the resources to protect those pegs. I expect all pegs to the dollar to collapse. The Hong Kong, maybe last, but certainly the Middle Eastern ones, if things continue in this way. Loving this ocean spray coming off. It's just so beautiful. It's like a mist. It's beautiful to breathe as well. Very healthy for you, respiratory wise. So, what do? Reduce your money in the banks. Hold more, yes, sad to say it, CBDC stroke stable point, the pilot stable point, which is USDT, USDC. Yes, it's criminals. Yes, the collateral will be questionable. Alternatively, if you think the collateral could collapse, because they bought a lot of treasuries, don't forget, and that stable coins might fail, which is a possibility. Let me tell you, every counterparty position has a risk. Hold more cash because that can't fail. Cash. Notes, not in the bank. Notes at home. Euros, dollars. You need to get money out of the system. Hold notes at home. That ensures at peak panic moments that you will have money to spend. It's not going to go up. Buy more gold and silver on the thin volumes that are available at low prices. So summaries. Get your money out the bank. Banks are going to become part of the story. Get more of that money into cash notes held at home or at a safety deposit box. Maybe have some stable coins, cash at home, stable coins, buy more gold and silver while it's cheap. Pay the premiums. Why do I say pay the premiums? Because the cash price, the casino price on the COMEX is not the real price anyway. It's a gift. The premium isn't a real premium. We've got to get a little bit off-road. This is the bit where I like. Real beach sand here. It's kind of snaky and fun. This is when the riding becomes fun. We didn't have much of that today. It was too much on the road. I hate being on knobblies and running them down on road riding. I suspect this is a hiker's trail and I'm going to get into shit at some point if I run into anybody hiking. I'm pretty sure motorcycles should not be on this. But anyway, I'll be a little bitch, be a bit naughty, because it's end of the day. Everybody should be home. And you deserve a little bit of something different and more interesting. For those that don't know where we are, I don't know if I mentioned it, but it is Cape Town, South Africa. If you're going, hey, that looks quite cool, well, I should get out there. Yeah, you should. Should have done that standing, but kind of rocky. These bikes are so much better than I am talented. Things you think will be a problem. That's a nasty old hole there. Don't want to fall into that guy. The bike just handles, and it's a very low rev, torquey bike. I'm a big fan of it. I've got the same bike in different countries. Kind of builds familiarity. There's nothing better for this kind of riding. As I say, I'm going to be in deep dwang because I'm late for dinner. But some things just have to be done. Loving the sand. Woohoo! Sand and rocks can be an interesting combination though. You don't want to fall off in the sand onto them. You can break a arm pretty easy on these rocky ridges. The key is just to keep gassing it and trust the bike. So good. Some deep sand there. So you got the takeouts, you got the exec sum. There's another crypto option that I'm doing. If they're going to do stable coins, one of the lowest value cost stable coin on borders is Tron as a chain. And technically Tron's been doing quite well. We like it. So if there's to be problems, and there's going to be a lot of money coming into the ecosystem of crypto, our opinion is you can hold Tron during that period. It'll outperform Bitcoin. because a lot of stuff will be getting sold off. It'll be based on its use case, because money will be fleeing. And by the way, Tron is not well used by Europeans and Americans. It's very well used, much more proportionately, by Asia, Turkey, Africa, and emerging. Well established. I think I have to turn around, guys. I'm going to be so late. I'm going to be disrespecting everybody. As much fun as I'm having. The light is dying. We're going to have to come do this path another time. You can see there was fires here recently. I'm also being a bit naughty. I need to find out the rules. I don't want to destroy too much beautiful flora. I am mainly riding on the path, except for that bit. So let's head on home. So you can look at the technicals of Tron if you like, but it's one of the biggest for onboarding on the emerging side. On stables, and it's technically holding up very well. And we have setups against Bitcoin that you can find out more about if you're a community member. Click the links below, book your call. But this is reset, and this is our core focus. How and where do you position to survive reset? What should you be doing? That was quite deep sand, that one. And over here, keep the gas on. A little bit of swivel, try to find some traction. So yeah, click the link, book a call. Enjoy the video, take what's for free here and use it, and hopefully prepare yourself as well as possible. You've got to build wealth during these times and secure yourself a good existence. Retain that wealth, protect that wealth, because they're coming for it. And tokenization is part of that attack vector. Tokenization is 100% part of that attack vector that wants avoiding. Recognize you might need to have some dark money. And you also need to have some official money, some cash. And have a good reset. Don't suffer alone. If you want to be with people that have solutions, a network that are focusing on this, a community with members all over, you know, Australia, New Zealand, right the way to the other side, California, USA, and all points in between, taking in Hong Kong and many more. That's the bit I knew I had to avoid. There was some rock that got removed, some hole there. I think we should survive the rest, now that we made that. Yep. So with that, I'm going to leave you to enjoy the rest of the video. You've got the links. By the way, pure gold, serving America as well as UK. Links below. SimpleFX. I'm trading the Korean one on that. You can trade crypto. You can pay and send crypto. You can onboard fiat. It's one of those multi-platform that is very flexible and allows you to have both money in fiat and in crypto, and to trade both simultaneously using either as collateral. Very useful. I'm using it. I've done very well with it. I've withdrawn a 7-digit sum out of it and put it in further stack. as per, you know, we eat our own cooking here. So I've not had problems. I don't expect you to have as well. Also, Scandinavian Capital Markets, who we interviewed the CEO, you're going to 80 times overperform everybody else if you're in our community with that broker compared to the rest of their database.
All those links below, just hit the links to become part of that and to join through those brokers. And I hope you enjoyed the one. I want to ask you to tell us if you like it, if you've enjoyed it, and whether you want more of these kind of ride-along talks, because we can do them and you can be part of them if you enjoy them. But there's no charts. I'll discuss charting aspects, its fundamentals, and its takeaways. And you've got a clear exact summary of the takeaways. Yeah. Awesome, guys. Thanks for watching. Thanks for enjoying. And I'm going to wave goodbye and see you next time.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.